A 14.6% premium. Shanghai pays $89.07 for silver. COMEX trades 77.74. That gap exists today, not in theory. In live pricing. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, silver just printed a structural divergence across two global markets. Let's get straight into it. Lead story today. Shanghai Gold Exchange. Afternoon silver fix prints $89.07 per ounce. Morning fix prints $88.41 per ounce. COMEX silver trades $77.74 simultaneously. That is an $11.33 premium. That is 14.6% above Western pricing. Effective April 22, 2026. This follows 6 consecutive years of global silver deficits. The Silver Institute projects 67 million ounces deficit again. China maintains export restrictions on refined silver since January 2026. The unusual detail is persistence. Morning and afternoon fixes both hold elevated premiums. The timing is what deserves scrutiny, not the premium itself. The timing. Think about what that sequence actually means. Physical demand is not clearing at Western paper prices. That forces a structural question. Which market adjusts first? The ones paying attention already know what to watch next. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Before I show you the full data picture, consider this. COMEX registered silver stands at 76.88 million ounces. Open interest exceeds 575 million ounces. That is 13.4% coverage, below the 15% stress threshold. The data is already telling you something. Let's build it out. Now let's build the full picture, because the Shanghai premium does not exist in a vacuum. COMEX inventory reports have dropped. Data from CME Group confirms 76.88 million registered ounces. Data from the U.S. Commodity Futures Trading Commission confirms open interest above 575 million ounces. That equals 235.2 million ounces tied to May contracts alone. That is 47,034 open contracts approaching first notice day. First notice arrives in 7 business days. Comparison matters here. Coverage was above 20% in 2022. Coverage is now 13.4%. That is a structural compression. London Bullion Market Association vault data shows stable but not expanding supply. Shanghai Gold Exchange withdrawals continue elevated versus 2025 averages. The rate of physical draw is not slowing. It is compounding. The data is doing the talking. The ones who were called early for flagging deficits are quiet now. That silence is not random. That is confirmation. And here is what makes that picture even harder to ignore. The global silver deficit projects 67 million ounces again. Industrial demand remains above 600 million ounces annually. Solar demand alone exceeds 200 million ounces. At the same time, COMEX leverage remains elevated with paper multiples exceeding 7 times registered supply. That is not a contradiction. That is the setup. And before anyone takes that as a green light, timing remains unknown. Setups can take a long time to resolve. What this tells you is the structural picture. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Here is the number most people are not talking about. The US dollar index sits at 98.35. 10-year Treasury yield prints 4.28%. Those two numbers suppress Western silver pricing. Now Federal Reserve policy becomes the primary variable. Fed nominee Kevin Warsh calls for balance sheet reduction. Senate testimony confirms a hawkish stance on inflation control. Real rates remain elevated. That creates pressure on non-yielding assets like silver. Markets are still pricing controlled inflation outcomes. Look at the yield curve and tell me that holds. When markets start pricing persistent inflation risk, metals reprice higher. Gold moves first. Silver follows with higher beta. That is the historical pattern. Every time real rates compress after a peak, Silver accelerates faster than gold. It has not been different yet. Now, layer geopolitics. US-Iran tensions remain unresolved. Energy flows through the Strait of Hormuz exceed 20 million barrels daily. Any disruption reprices inflation expectations immediately. That feeds directly into metals demand. Think about what that sequence actually means. Silver Western spot at 77.74, Shanghai price at 89.07, 11.33 premium. Short-term picture shows divergence holding. Key event remains May 1st notice day. If registered supply covers delivery demand, divergence persists. If delivery stress appears, COMEX price moves higher quickly. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on lower time frames right now. I cannot tell you what silver does tomorrow. Nobody can. If you think you know, good for you. Current environment shows conflicting signals between macro pressure and physical demand. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that costs you. So let's run both. The bear case is real. The US dollar index holds near 98.35 limiting upside. 10-year yields at 4.28% maintain real rate pressure. COMEX leverage allows short positioning to suppress paper price. The bull case is equally real. Shanghai premium holds above 14% across sessions. Global deficit reaches 67 million ounces again. Registered supply covers only 13.4% of open interest. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. Everything I showed you today points to one thing. Physical silver is pricing above paper silver globally. The only question is convergence timing. Do not take my word for it. Verify every number I gave you today. Check the data yourself. CME Group, Shanghai Gold Exchange, the Silver Institute, logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0, out.